Real Estate Investment Primer 1. Introduction. In the current economic environment, real estate investment remains one of the favored choices for many investors. Whether seeking stable rental income or anticipating asset appreciation, the real estate market offers abundant opportunities. However, real estate investment is not without risks. It requires investors to possess market analysis skills, financial planning expertise, and a long-term perspective. This video aims to provide a comprehensive beginner's guide for investors entering the field of real estate investment through analytical analysis, including basic knowledge of buying properties, renting, and investing through real estate investment trusts. The appeal of real estate investment. The attractiveness of real estate investment lies primarily in its potential for multiple returns. Firstly, real estate, as a tangible asset, typically retains or even appreciates in value over the long term, especially in areas with stable economic growth. Secondly, rental properties can provide owners with stable rental income, which is crucial for achieving financial freedom. Lastly, the diversity of the real estate market provides investors with a wide range of choices, from residential and commercial to industrial properties, each with its unique investment value and risks. Challenges of real estate investment. Despite its significant allure, real estate investment comes with numerous challenges. Market fluctuations, financial burdens, property management, and more are all issues that investors need to address. Additionally, the barrier to entry in the real estate market is relatively high, requiring substantial initial investment. Therefore, conducting thorough market research and financial planning is crucial before entering this field. Video objectives. Through this video, we will delve into the basic knowledge and strategies of real estate investment, including how to choose investment properties, assess investment returns, manage rental properties, and invest through REITs. Our goal is to provide viewers with a practical guide to help them make wise investment decisions and achieve success in the real estate market. With a grasp of the fundamental knowledge of real estate investment, investors will be better equipped to navigate market changes, maximize investment returns, and control associated risks. Let's embark on this exciting journey of real estate investment together. 2. Buying property as an investment introduction. Buying property as an investment has always been a significant option among various investment channels in the current economic environment. Through analytical analysis, we can gain a deeper understanding of the basic principles of property investment, key considerations, and how to formulate effective investment strategies to maximize returns. Basic principles of property investment. Property investment is not merely about purchasing real estate. It involves a thorough understanding of the real estate market and precise financial planning. Firstly, investors need to clarify their investment goals, whether seeking long-term asset appreciation or expecting short-term high returns. Secondly, understanding the basic operation mechanisms and legal regulations of the real estate market is a prerequisite for property investment. Lastly, for first-time investors entering the real estate market, careful evaluation of their financial situation and determining the appropriate investment scale are crucial. Key considerations. Market trend analysis. Before investing in properties, comprehensive analysis of the current real estate market trends should be conducted, including trends in property prices, rental levels, supply and demand relationships, etc., to predict future market changes. Location selection. Location is a key factor influencing property value and rental income. Generally, areas with superior geography, convenient transportation, and complete living facilities are more likely to attract tenants and buyers. Financial planning. Investors should formulate reasonable property purchase plans and budgets based on their financial capabilities, including down payments, loans, taxes, maintenance fees, etc. Long-term holding versus short-term flipping. Depending on different investment goals, investment strategies may vary. Long-term holding typically focuses on asset appreciation and stable rental income, while short-term flipping seeks to profit by buying low-priced properties and selling them when the market heats up. Practical recommendations. Seek professional consultation. For investors unfamiliar with the real estate market, seeking professional advice from real estate consultants or brokers can provide market analysis, investment advice, and legal support. Risk management. Property investment also comes with risks, such as market fluctuations, property vacancies, etc. Investors should establish risk management plans, including diversification of investments, insurance protection, etc., to minimize potential losses. Continuous learning and market monitoring. The real estate market is unpredictable, and investors should continuously learn and monitor market dynamics to adjust investment strategies promptly. Through the above analysis, we can see that buying property as an investment requires investors to possess comprehensive market analysis capabilities, rigorous financial planning, and flexible investment strategies. Only in this way can investors make steady investments in the real estate market and achieve their financial goals. 3. Renting out properties. Renting out properties is a common method of real estate investment that can provide investors with stable rental income. However, successful property investment requires not only a deep understanding of the real estate market, but also proper management of properties and tenant relationships. Through analytical analysis, we will delve into the strategies, responsibilities, and potential returns and risks of renting out properties. Steps and strategies for renting out properties. Property selection. Successful rental investment begins with choosing the right property. Investors should consider factors such as location, property type, amenities, and future development potential, all of which will directly impact rental levels and property attractiveness. Rent pricing. Reasonable rent pricing can attract tenants while ensuring investment returns. Rent should be based on market research, considering rental levels of similar properties in the same area, and adjusted timely to reflect market changes. Property management. Effective property management includes maintenance, handling tenant inquiries and complaints, and regular property inspections. For most investors, hiring a professional property management company may be a time-saving option. Landlord responsibilities. As landlords, investors need to assume certain legal and ethical responsibilities, including ensuring safety and health. Landlords are responsible for ensuring that rental properties meet safety and health standards to avoid health risks to tenants. Compliance with lease agreements. Lease agreements signed with tenants should be fair, clearly outlining the rights and obligations of both parties, and strictly adhered to. Respect tenant rights. Landlords should respect tenants' privacy and residency rights and refrain from entering leased properties without permission. Analysis of returns and risks. Returns. Renting out properties can provide stable rental income, and when property values rise in the real estate market, the property's appreciation can also bring additional returns to investors. Risks. Risks of rental investment include tenant default, property vacancy, market fluctuations, etc. Investors should manage and reduce these risks through strategies such as strict tenant screening, diversified investments, and financial planning. In conclusion, renting out properties is an attractive investment method, but it requires investors to have professional knowledge, management skills, and risk awareness. Through careful strategic planning and effective property management, investors can gain stable returns while controlling investment risks. 4. Real estate investment trusts, REITs. Real estate investment trusts, REITs, provide investors with a relatively straightforward way to participate in the real estate market without directly purchasing or managing properties to earn returns. Through analytical analysis, we can gain a deeper understanding of the operation mechanism, investment advantages, and risks of REITs, and how to choose suitable REITs products. Concept and operation mechanism of REITs. REITs are trust funds that pool funds to invest in various real estate or related assets. They are usually listed on stock exchanges and traded publicly like stocks. The operating model of REITs requires the distribution of most of their income, usually at least 90%, in the form of dividends to investors, making REITs an attractive source of income. Advantages of investing in REITs. Liquidity. Since REITs trade on public markets, they have higher liquidity than direct real estate investments. Diversification. REITs invest in properties in various real estate markets and regions, reducing the single market risk faced by investors. Accessibility. Compared to the large capital required for direct property purchases, investing in REITs has a lower barrier to entry, allowing more investors to participate in real estate investment. Professional management. REITs are managed by professional teams, eliminating the need for investors to personally deal with property purchase, maintenance, and leasing issues. Risks of investing in REITs. Market volatility. The prices of REITs are influenced by market supply and demand and may experience significant fluctuations. Interest rate risk. Rising interest rates may increase the financing costs of REITs and affect investors' demand for REITs. Operational risk. REITs' income depends on property occupancy rates and rental levels, and poor property management may affect income. Choosing the right REITs products. Research REITs types. There are various types of REITs in the market, including residential, commercial, healthcare, etc. Investors should choose the appropriate type based on their investment goals and risk preferences. Analyze financial performance. Review the historical returns, balance sheets, and dividend payment records of REITs to assess their financial health. Consider market outlook. Analyze the target real estate market for investment, evaluate its long-term growth potential and potential challenges. In conclusion, REITs provide investors with a relatively simple and effective way to participate in the real estate market while enjoying stable returns. However, like all investments, investing in REITs also requires careful research and analysis to ensure that investment decisions align with individual financial goals and risk tolerance. Practical recommendations. After exploring various aspects of real estate investment, including property purchase, rental properties, and investing through real estate investment trusts, REITs, we now provide some practical recommendations to assist investors in making wise investment decisions and management in the real estate market. Overview of practical recommendations. In-depth market research. Before making any real estate investment, conducting thorough research on the current market conditions, long-term trends, and potential risks is crucial. This includes comparing property prices, rental levels, property supply, and demand in different areas. Financial planning and budgeting. Develop a reasonable investment budget based on individual financial situations and reserve sufficient funds as a buffer to cope with possible market fluctuations or other unexpected expenses. Risk management. Diversify investment strategies to spread risks, such as investing in properties of different types or regions, or combining real estate investments with other types of portfolios. Professional consultation. For investors unfamiliar with the real estate market, seeking professional advice from real estate experts, financial advisors, or lawyers can help avoid common pitfalls and legal issues. Continuous learning and market monitoring. The real estate market is constantly changing, and investors should continuously learn through various channels, such as professional books, online forums, market reports, etc., and stay updated on the latest market trends. Specific practical recommendations for property purchase investment. It is recommended that investors conduct detailed location analysis, select areas with high potential for appreciation, and prioritize properties with higher rental yields. In terms of rental properties, investors should learn how to effectively manage tenant relationships, including drafting reasonable lease agreements, conducting regular property maintenance, and adjusting rents timely. For investing in REITs, investors are advised to start with publicly traded REITs. Choose products with strong financial stability and stable dividends, and pay attention to diversifying investments in different types of REITs to reduce risks. Through the aforementioned analytical analysis, we provide a series of practical recommendations aimed at helping investors make wiser and more cautious decisions in the real estate market. Remember, successful real estate investment is not only about choosing the right properties, but also about comprehensive market analysis, financial planning, and risk management. 6. Conclusion. As we have delved into various aspects of real estate investment, including property purchase, rental properties, and investing through real estate investment trusts, REITs, we hope that these analytical analyses can provide you with practical guidance and strategies on your journey in real estate investment. Real estate investment is both an art and a science. It requires not only a deep understanding of the market and keen insight from investors, but also careful planning and meticulous management. While enjoying the potential returns from real estate investment, we must also be aware of the risks and challenges involved. Therefore, here we make the following appeals to every viewer. Conduct market research prudently. Delve into market trends, property locations, and potential appreciation opportunities before making any investment decisions. Develop reasonable financial plans. Based on your financial situation, formulate an investment budget and leave sufficient cushion for possible market fluctuations or other uncertainties. Focus on risk management. Effectively manage investment risks through diversified investments, appropriate property insurance, and professional property management. Continuous learning and improvement. As the real estate market is constantly changing, continuous learning of new knowledge and skills and staying updated on industry trends will help you become a more astute investor. Finally, we encourage every viewer to actively explore the possibilities of real estate investment. However, throughout this process, please maintain caution and rationality and make adequate preparations and plans. Remember, successful investment is not just about acquiring wealth, but also about realizing personal long-term goals and dreams. Thank you for watching, and we hope this video can provide you with assistance and inspiration on your investment journey. If you have any questions or would like to further discuss, feel free to leave a comment for exchange. Let's explore opportunities and embrace challenges together in the world of real estate investment.